From U.S. to Europe to Asia, companies are seizing on strong investor demand and a lack of clarity around funding costs headed into issuing the most debt in years. Bloomberg's Michael Tobin wrote a feature on this surge. It's one of the most read stories on the Bloomberg terminal, and he joins us now today. Talk about what exactly is coming to market here, because there has to be some awareness of risk when you're thinking about investing in credit in particular.
Absolutely. Everything is out there right now. Like high-grade, investment-grade companies are all hitting the market. We've had more than 40 deals in the U.S., which it feels like post-Labor Day. Like, it is so busy. High yield has everything too. We have LBO launches that are coming out. Leveraged loans are on fire as well. And we've gotten some repricings for a pretty big name that hit the market this morning. And within high yield too, we saw another one of those companies that was kind of a name that had struggled a few years ago that tapped the market and did a sale in one day that they upsized twice. So it's on fire.
Well, that's incredible too. I mean, you are very close to the ground. You talk to the underwriters, you talk to the investors. Do they think that this party can last, or are they trying to get ahead of something?
It's slowed down a bit today, but I think part of the reason why it's been so busy is we're coming up on Memorial Day, so it's going to slow down a bit. Some people that we've talked to who are on the buy side are saying, like, it makes sense that this rush should be happening now. People want to basically get their orders in. Companies want to go out and issue debt. But more importantly, there's not a whole lot of clarity right now on what the Fed is going to do. And we've really hit a window right now where companies can find attractive levels to issue debt. High yield spreads are inside of 300 basis points, and they've sat there for a little bit. So it's a good time for borrowers to come to the market.
Well, it's interesting because you were talking about kind of complacency here, just kind of a calm in the market, but next week is CPI as well. So it's kind of like you have to get in front of a few things if you're worried about interest rates. Are investors not concerned, particularly when it comes to high yield and leveraged loans, that there are going to be more cracks in the market?
Sometimes these cracks come up and sometimes there's a pause. And usually when that happens, you're going to see kind of like a pendulum that swings. Like, we talk about this a lot, like when we talk to people in private credit. And if there's like a pause in the market, in the broadly syndicated loan market, that's where you can see some of the private credit issuers like kind of come in and fill that void. So usually when there is that pause, it'll take a pause for maybe a week or so and then it'll come back. Like, I don't think there's any larger concerns right now about a big freeze up in the market. These blips kind of come up from time to time.
It's interesting because I want to hear more about the issuer that came to market, for example. What's the biggest difference between the stress being felt in the prior cycle that they went and today, where, to your point on volatility, the MOVE index is actually calmer this week than it was for the past few weeks?
Yeah. Well, we have a bit more sense of where interest rates are. So the company that we think is really interesting.
Simple as that.
Simple as that. So Cloud Software Group, which is Citrix, it was a leveraged buyout deal that happened a few years ago. Elliott and Vista Partners had acquired this company, and the debt really sat on banks' balance sheets. Interest rates were going up in 2022. The banks couldn't really find a level to sell this at, and it just sat there. And they offloaded this last year at a super steep discount. People were kind of skeptical about the name, they had to really mark down the price to sell the debt. But now they're able to basically come to market and sell a deal in one day.